Manufacturing, fabrication, trades, and e-commerce, these aren't just the backbone of the modern economy, they are businesses sending billions to their industrial landlord every single year. The question is, how can you become one? Hi, I'm Anita Yau. I've done over 200 plus commercial property transactions as a leading commercial buyer's agent in Australia. If you feel you need help with sourcing quality commercial deals and like the idea of having an ex-construction and property lawyer with a combined 20 plus years experience in property, then I'll leave a link for a free discovery call session in the description below. Today, I'm going to give you everything you need to know about industrial property, why it's still the best performing asset in 2026, the opportunities, the stats, the 2 Australian hotspots that should be at the top of your list. But first, let's start with the basics. Industrial property covers everything that goes on behind the scenes of our complex economy, and it can be broken into 4 main categories: logistics, manufacturing, cold storage, and e-commerce. I can give you the biggest advantage of industrial real estate in one word: resilience. When the pandemic hit, industrial properties and storages thrived. Locked down at home, people were still shopping online. In fact, they were shopping more than ever. Businesses were looking for more space to hold inventory, just to keep up with all the orders. Vacancy rates actually fell to 0. Warren Buffett famously said, "Be fearful when others are greedy, and greedy when others are fearful." That's how you build true generational wealth. We are now yet again facing uncertainty in the world, similar to the Iraq War, the GFC, and the pandemic. And with the oil crisis and war in the Middle East right now, it is now your opportunity to invest in defensive assets so that your wealth keeps on growing regardless of what is happening around the world. That is why industrial property is the #1 asset for commercial property investors, and it still is in 2026. Industrial properties have solid leases, usually between 3 to 5 year long leases, some even up to 10 and 20 years with strong capital growth and net yields around 6%. Tenants can be your favorite e-commerce brand, local trades like electricians or plumbers, and even large national blue chip companies like Total Tools, Petstock, or 99 Bikes. But that's not all. These properties are incredibly flexible. They aren't like a house. They can transform into a podcast studio, video production company, office spaces for a law firm or accountant, or whatever it is in demand. All right, I'm sure you get it by now. Industrial properties has huge advantages. How is it faring in the market? Over the last 2 decades, the only real estate that outperformed industrial property was agriculture. But before you go running off to buy a farmland, you should know that agriculture is usually an active investment, meaning management and development. Industrial property is the opposite. It's almost always passive, meaning you can sit back, relax, and watch the money come in. But is it always that easy? What are the chances of industrial property sitting empty? That is why we look at the vacancy rate. Vacancy rate has increased slightly compared to 2023. It's now sitting at 3.2%. Despite that, industrial assets are still investors' top pick, and for 3 reasons: steady cash flow, long leases, and institutional businesses. A 3.2% vacancy rate may sound high if you are new to the space. However, the market equilibrium in industrial property is 4%. Australia is actually one of the lowest rates in the world right now, and the demand still outweighs the supply. In layman's terms, that means a quality industrial asset should have a vacancy period of no more than 3 to 4 months. So, it's fair to say that after buying a premium vacant industrial asset, you can expect to have it tenanted by settlement date. Now, let's talk about cap rates. This is the term you will see in reports or headlines. This is the rate used to assess the price of the industrial property. But cap rates are typically used by vendors. For investors, the metric used to measure actual return is net yield. These two numbers can be very different. As you can see, the cap rates for industrial properties were sitting at 5.4% in December 2025. This is the market rate achieved by vendors. Net yields returns are much harder to find. However, I'm a commercial buyer's agent working inside the industry, and I'm seeing anywhere between 5 to 6% net yield returns. And they will only get sharper because of a current supply shortage. This year, 2 million square meters of industrial property is projected to be built. Meanwhile, the current demand is around 3.3 million square meters a year. That's 65% higher than the current supply. In a nutshell, there's just not enough space, which is why it's a fantastic time to invest in industrial properties before supply catches up to demand. The latest trend, as reported by Vanessa Rader, Head of Research, Ray White, saw total returns over the last 5 years hitting 15.6% per annum, 14% over the past 10 years, and 30.2% in December 2021 alone. And despite the downturn during 2008 GFC, the total returns over the 20-year horizon is still achieved at 12% annually. In 2024, $22.5 billion was invested in industrial property. This was the biggest market driving Australia into the top 6 most active commercial real estate markets in the world. And this year, industrial property is on track to remain the biggest piece of the pie. However, just because the market is strong doesn't mean every investment is a winner. You still need to know which region to pick. This is where I'd recommend Sydney and Brisbane markets. These are the fastest growing industrial markets in Australia. Over the last quarter, leasing activity in these markets has risen by 44% and 51%. Net yields in premium markets here are around 5 to 6%, and secondary markets are 6.5%. But every investor is different. So head over to crewealth.com.au or simply subscribe to the channel for expert insights, updates, and guides to commercial real estate investing. Thanks for watching, and I'll see you in the next one.